Good morning, good afternoon, and good evening to all of you joining us, hopefully from different parts of the world. Welcome to today's pension briefing. Our session today will focus on separation essentials for staff members who are separating with less than 5 years of contributory service in the pension fund. I'll walk you through what you need to know, what options are available to you, and the steps you should take to prepare for separation. But before I do that, let me introduce myself. My name is Dilbar Muradova, and I'm part of client services team at the New York office of the Pension Administration. I'll be guiding you today through key information that you need to know and answer your questions at the end of the presentation. So let's get started. Before we begin, I'd like to give you a quick overview of the structure of this week's pension briefings. All of the sessions this week will be focused on separation from service. We're holding 3 sessions in total, one today, tomorrow, and one on Thursday. Each of the session will run for about an hour or an hour and a half to 2 hours from 9 a.m. to 11 a.m. New York time. Each session is tailored to a specific group based on the number of years of contributory service one may have at the time of their separation. Again, today's session is designed for those who are separating with less than 5 years of contributory service. If that applies to you, then you are at the right session. If not, then tomorrow's session will be for those who will have 5 years or more of contributory service at the time of separation, regardless of their age. And finally, the third session on Thursday will focus on practical aspects of separation, such as how to set up your MSS account, run estimates, upload documents, and much more. And the same 3 sessions will be offered again in French next week. For anyone who is unable to attend, or if you would like to revisit previous presentations and recordings from both past or upcoming pension town hall sessions, all materials are available on our website under the pension town hall page. I believe we have now posted a link to that page. The recording and a copy of today's presentation will also be posted there shortly after the session. Just a quick disclaimer, this presentation is intended to provide you with the general information. In case of any ambiguity or inconsistency, the UNJSPF regulations and rules will take precedence. Today's session is all about separation from service with less than 5 years of contributory service. I'll go over your benefit option, walk you through the practical steps you need to take, including the documents that you'll need to upload to submit to the pension fund. I'll also give you a quick overview of the UNJSPF website and the member self-service portal, so you'll know exactly where to find tools and information that will come handy during the process. The presentation part will take about an hour, and after that, we'll open the Q&A segment where we'll spend about half an hour answering your questions. My colleague, Mr. Masada Gay, who is a Deputy Chief of Client Services in the New York office, will be moderating the Q&A and choosing the questions that are most relevant to everyone in this group. and we plan to wrap up the session by 10:30 a.m. Eastern Time, and hope you will find today's session helpful and informative. So what are the main key takeaways that I hope you take with you today after the session? First, it's important that you have a clear understanding of your benefit options. I'll also explain how your future entitlement is calculated. This way, you'll know what choices you have when separating and hopefully feel confident in making the decision that is right for you. Second, we want you to feel fully prepared for separation process. That means knowing exactly what documents you need, understanding the typical processing timeline, and also being aware of the factors that might impact how long it takes for us to process your benefit. Sorry. And finally, we want to make sure that you know where to turn for support and information. I'll show you how to use the UNJSPF website and the member self-service portal to access helpful tools like estimate tool, and also know how to get in touch with us if you need extra assistance. So let's begin. Before we go over your benefit options, I would like to take a few minutes to give you a quick overview of the UN Joint Staff Pension Fund. The fund currently serves around 240,000 members. That includes about 150,000 active staff members from the 24 member organizations, like many of you today, as well as nearly 90,000 retirees and beneficiaries who receive monthly payments from the fund, such as retirement, disability, or survivor's benefit. In terms of funding, the pension fund is in a strong position. As of 5 September, the fund held over $100 billion in assets. The important point is that the fund remains very well funded, with the funding ratio above 100%. That means that we have more than enough assets to cover both benefits we are paying now and those that we will pay in the future, including yours. And if you're interested in more detailed information about the fund's financial health, we have included a link in the presentation to our website's page on actuarial matters. You'll find detailed explanations about plan design and solvency matters. With this, we hope this gives you confidence that the fund is secure and well positioned to meet both current and future financial obligations. Let's now move on to the first part of today's presentation, where we'll explore the key principles that determine what you're entitled to from the pension fund. The type of benefit you are entitled to from the pension fund depends on a few key factors. One of the most important factors is the length of your contributory service at the time of your separation. If you're attending this session, it means that at the time of your separation, you will have less than 5 years of contributory service. This is a critical point because it means that you do not have vested pension rights in the pension fund, meaning you have not met the requirement to qualify for a periodic or a lifelong benefit from the pension fund. Essentially, that means that your only benefit option is a withdrawal settlement, which is a one-time payment of your contribution and interest you earned on this contributions during your active participation in the pension fund. So in today's session, we'll be focusing on the withdrawal settlement, which is the only benefit option available to you if you separate with less than 5 years of contributory service. You also have an option, which is not a benefit, but an option that you can make. Instead of taking your pension, your withdrawal settlement right away, you can choose to leave your money in the fund for up to 36 months after separation. So I'll explain shortly why someone might consider doing that. But for now, here are 2 key takeaways from this slide. So if you have less than 5 years of contributory service, you have 2 options when you separate. 1, take a one-time payment from the fund in the form of withdrawal settlement, or leave your holdings in the fund for up to 36 months in case you wish to return to UN service and rejoin the pension fund within those 36 months. And we'll go over these options in detail shortly. So to help you better prepare for separation, it's important that you review key information about your contributory service and get a sense of what your potential withdrawal settlement might be when you separate. The first place to start is your annual pension statement. This document is issued once a year, and it provides a full overview of your history with the pension fund, from the date you joined right up to the most recent year end. If you log into your member self-service portal and go to the Documents tab, you should see your latest pension statement, which is for the year end of 2024, which was published earlier this year. The statement gives you a summary of your contributions, the total length of your contributory service, your date of entry into the fund's participation, and other key information as of 31 December 2024. If you haven't checked your pension statement, I highly encourage you to do so as soon as possible. The next step is to run an estimate using the estimate tool inside your member self-service account. I'll walk you through how to do that later in the session. Also, as I mentioned earlier, we have a dedicated session on Thursday, this coming Thursday, to have a practical walkthrough of the member self-service, including how you can run estimates. So this tool will give you a good idea of the amount you might receive as a withdrawal settlement. And just a quick note, the estimate is not a final calculation. It's based on the data that we currently have on file for you up to the year end of 2024. So let's say if you had a promotion in 2025, that won't be reflected in your estimate. So to summarize, if you're preparing for separation, make sure to check your annual pension statement and run an estimate in your member self-service portal. So let's take a quick look at what a pension statement might look like, so you know how to review your own. Again, if you haven't done so already, I strongly encourage you to log in to your member self-service portal and you review your latest statement. It gives you an overview of your participation with the pension fund. Right at the top of the statement, you'll see your personal details. your name, date of birth, and employing organization. You'll also see your vesting status, which indicates whether you have reached 5 years of contributory service or not. For most of you attending this session, this will likely say no, which means that you're not vested and you're only eligible for a withdrawal settlement. It's important that you double check your name, the spelling of your name, and date of birth, and make sure that they match your official document. If anything looks incorrect, please contact the HR of your employing organization as soon as possible so they can update these records in the fund. Next, under section B, you'll find 2 important dates. Date of entry into fund participation, meaning when you became eligible to join the fund, and beginning date of contributory service, meaning when you actually started contributing to the pension fund. In many cases, in most cases, these dates are the same, but not always. For example, if you have availed yourself of restoration, validation, or transfer in options, these dates may differ. So in an example in front of us, the participant entered the fund on 18 June 2024, but their beginning of contributory service is listed as 19 July 2018 because they use the restoration option. I'll explain that option a bit later in the session. But in this case, these 2 dates are different because this participant restored their prior contributory service. Also, in section B, you'll see the total contributory service as of 31 December 2024. In this example, the participant had 4 years, 6 months, and 25 days of contributory service as of 31 December 2024, which means that they do not have vested pension rights at that time. And if you had any break in service or leave without pay, you'll see those listed here too. And just keep in mind that they do not count towards your contributory service. Moving on to section C, you'll see the total amount you've contributed to the funds together with the interest you've earned. So in this example, the participant has contributed just over 23,000 with more than 2,000 earned in interest. If they separate with less than 5 years of service, of contributor service, that total, meaning contribution plus interest, is what they will receive as a withdrawal settlement. Section D shows contributions that you have paid for validation or restoration. In this example, the participant paid for restoration of their prior contributor service, and it is reflected under the restoration part. And finally, section E shows pensionable remuneration used to calculate your monthly contribution to the pension fund. So to recap, please review your pension statement inside your member self-service, check your personal details and contributory service, and if anything looks incorrect or unclear, contact your employing organization or the pension fund, and ideally you should do that before you separate from service. And of course, before you separate from service, make sure to run an estimate using the member self-service estimate tool inside your MSS account. In this example, the participant separated on 31 December 2024, And because they had less than 5 years of contributor service at the time of their separation, the only option available to them is the withdrawal settlement. Now let's take a closer look at the two options available to you when separating with less than 5 years of contributor service. The first is a withdrawal settlement, and the second option to defer your payment for up to 36 months. Before we go into details, I want to highlight a helpful resource. The pension fund has created a series of over 20 short videos, each of them just a few minutes long, available in English, French, and some in Spanish. These videos cover a wide range of pension topics in simple language. One video in particular is called Benefit Options, which explains the different types of benefits available to funds participants, including the withdrawal settlement that we will be discussing today. I'll not play this video, but you'll find the link to this video in this presentation if you would like to watch it later. In addition to the videos, our website also contains several pages that are especially helpful when separating from service. One key page is the benefit option page. In that page, you will find documents like benefit eligibility chart and comparison chart that shows the different benefit option based on the length of contributor service. For your group with less than 5 years of contributor service, the choices are limited to a withdrawal settlement or deferring payment for up to 36 months. But for participants with more than 5 years of contributor service, that page also shows additional options that become available once they are vested in their pension rights in the pension fund. Now, let's talk about your benefit option, the withdrawal settlement. So this is the only benefit you are entitled to if you separate with less than 5 years of contributor service and choose to receive a payment. So what is exactly a withdrawal settlement? It's a one-time payment, final payment from the pension fund that settles your relationship with the fund completely. So once this payment is made, there is no further benefit that are payable to you or your survivors. How this amount is calculated? It's based on two components: the total amount of your contributions to the fund that you made during your participation, plus the compound interest you earned on those contributions. And the interest rate is 3.25% per year, compounded annually. So, which means the longer you contribute, the more interest you accumulate. One very important point here: employer contributions are not included in the withdrawal settlement. Again, a withdrawal settlement will never include the organizational share. Why? This is because the employer share helps fund the overall pension fund system, including crucial benefits like disability benefit or survivor's benefit. These benefits are paid regardless of the participant's age or length of contributory service at the time of the disability or death, and the employer contributions help pay for these benefits. So to summarize, the withdrawal settlement equals to your contributions plus interest earned, and it's a one-time final payment that settles your relationship with the pension fund. And it does not include the employer's share of contribution. So next, we'll go through a simple calculation. So, for example, if someone separates after 4 years of contributory service and chooses to take a withdrawal settlement, their payment would include both contributions that they paid and the interest that they've earned on those contributions during their active participation in the pension fund. So, for example, if they've contributed 20,000 and earned 5,000 in interest, their total payout would be 25,000 as a withdrawal settlement. Now, let's take a look at what happens if you receive a withdrawal settlement, but then years later or months later, you returned to work within the UN system and rejoin the fund's participation again. Can you connect your previous contributory service, the one for which you received a withdrawal settlement, with your new participation? The answer is yes, and it's done through a process called restoration. Restoration means reactivating your earlier contributory service by repaying the amount of your withdrawal settlement plus compound interest. And by doing so, you will add your previous participation to your new participation. So let's look at the example. Say you had 4 years of contributory service and received 25,000 as a withdrawal settlement. A few years later, you return to your UN system and rejoin the fund's participation. If you choose to restore, you would have to repay that 25,000 plus interest back to the pension fund. And by doing so, you will reactivate those 4 years of contributory service and add it to your current participation. Then let's say you work for another 1 year before separating again. Because of the restoration, your total contributory service would be now 5 years. 4 years from your previous participation plus 1 year from your new participation. And you might be wondering why it matters. It does because with 5 years of contributory service, you could become eligible for a retirement benefit that would have not been available to you if you only had 1 year of contributory service. So the restoration option can help you attain better benefit options. And one important note here is that restoration is optional. It's not something that is done automatically. If you come back and rejoin the fund, you need to apply in writing within 12 months of your return to restore your previous participation. So if you ever separate and later return to your UN service, keep restoration in mind. It could be a valuable way for you to maximize your future pension benefits. Now, let's talk about your second option if you separate with less than 5 years of contributory service. This option is called deferment of payment, or sometimes referred to as deferment of choice, under Article 32 of the Funds Regulation. Instead of taking your withdrawal settlement payment right away when you separate, you can choose to leave your contribution in the fund for up to 36 months. That's 3 years from the date you separate. You might wonder, why would someone choose not to take their payment right away? If you return to UN service and rejoin the pension fund within those 36 months, your previous contributory service is automatically combined with your new service. You won't need to restore your previous service or repay any withdrawal settlement because you never received one. And here's a big benefit. You will keep your original date of entry into the fund, which determines your early and normal retirement ages. So let's say hypothetically, you joined the fund in 2013. Based on that date, your early retirement age is 55, your normal retirement age is 62. But in 2014, the rules have changed. New participants, after joining the fund as of 1 January 2014 and afterwards, have an early retirement age as 58 and normal retirement age as 65. If you were to take your payout when separating and then come back later, you'll start with the new entry date, and those higher retirement ages would apply. However, if you defer your payment and return within 36 months, you keep your original 2013 entry date, and those earlier retirement ages of 55 and 62 remain. And that can make a big difference for your future benefits. However, of course, deferring means you don't get any payout during that time. And one crucial point here is that your contributions do not earn interest while they are held by the fund. If you think you'll return to the UN system within a few years and within this 3 years and don't urgently need the payout, it's often a smart choice. So how does deferment work? If you choose this option, you simply fill out page 1 of the payment instruction form, PENS E6. You do not need to complete page 2 because you are not requesting a payment. You're just letting the fund know that you want to defer the payout. And if you do return to UN service and rejoin the fund within 36 months, your participation will then be considered continuous. There will be a break in service between these 2 periods that is not pensionable, but your original period stays intact. You'll then just keep building on this participation until you separate again. Can you change your mind? Absolutely. If during the 36 months you decide that you won't be returning to UN service and you want your payout, just complete page 2 of the payment instruction form and submit with the required documents. We'll then process your withdrawal settlement. So what happens if you do nothing? If you neither return to service nor submit your payment instructions within 36 months, you must submit your payment instruction as soon as possible after the deferment period ends. You have to be careful. If you wait more than 2 years after the deferment period ends without taking any action, you risk losing your entitlement to your withdrawal settlement. So it's very important that you stay in touch with the fund and act within that time frame. You can find more details about this on our website under benefit options, including what happens with break-in service when no payout is received. So to sum it up, deferment lets you keep your contributions in the fund for up to 36 months after separation. During this time, you can see if you can return to your UN service, If you do return within 36 months, your participation continues with your original entry date and retirement ages. If you don't return, you can request your payment anytime during the deferment or shortly after it ends. But remember, waiting more than 2 years after deferment ends without action could mean that you will lose the right to your benefit. Right. So if you separate from service, but choose not to take a payment from the fund, and then return to UN service and rejoin the pension fund within 36 months, your participation will simply resume. Your new period of contributory service will be added to the service you already accrued before separating. However, the time between your contracts will be treated as break in service. This break in service can be made pensionable because the fund does not accept voluntary contribution to cover these gaps. So now let's take a look at the second scenario. If you separate, don't take a payout, but your break in service lasts longer than 36 months. In this case, because your break in service exceeds 36 months, you would start a new period of participation if you rejoin the fund later. So even though you did not receive a payout, the length of the break means your previous participation ends and you will get a new entry date for the fund. However, there is still an option to combine your past participation and your new service period. You can apply to auto-restore your previous participation by submitting a written request within the required timeline, within 1 year from rejoining the fund's participation. If approved, then your previous participation will become part of your new participation period. All right, now let's look at some of the practical information. So how do you get ready for separation from service when it comes to your pension? One of the most important things is to register for the fund's member self-service portal. If you haven't done so already, please do so as soon as possible. This portal gives you access to key tools and your pension details. Once you're logged in, you can run pension estimates to see what your benefits might look like depending on your different separation dates. You can download official pension forms you may need during the separation. You can view your annual pension statement. You can also submit documents directly to the fund if your organization asks you to manage that part on yourself. So, but before you separate, we highly recommend that you run at least one pension estimate to get a clear picture of what to expect. Please review your personal information inside your pension statement, like your name, date of birth, marital status, and contributory service. If anything looks incorrect, reach out to your HR office right away so they can update it in the fund records, and ideally before you separate from service. You need to attend pension town hall like this one, so great job for being proactive. You can also take advantage of our pension e-learning modules, which are short and easy to follow. And of course, if you still have questions after exploring all these resources, please contact the fund. We are here to support you. There is also a helpful video called How to Prepare for Separation that I encourage you to watch. It offers a clear guidance on the process and can make things a lot easier for you to understand. So the fund has worked very hard to put together a clear and practical overview of the separation process to help you know what to expect and, most importantly, what you need to do. So I would suggest start with the separating and retiring webpage. This page links to all essential information on both separation and retirement topics. Next, check out the UNJSPF benefit option page. It offers detailed explanation on the fund's main benefits, and it includes the comparative charts that will help you understand the difference between different options. The overview of the separation process page is especially useful. It walks you through each step and lists the documents that the fund requires when you separate from service. Under the general info about separation, you will find a downloadable separation checklist flyer that is handy tool to help you stay organized and plan your next moves. And finally, how to submit documents to the UNJSPF page explains the official ways to submit your documents, whether it's through member self-service account or via your HR office. It's very important that you follow your organization's instructions on how to submit documents to the pension fund. So all of these resources are designed to make your separation process as smooth and as straightforward as possible. Once again, you can run your pension estimate directly inside your member self-service portal using the estimate tool. Just enter your expected separation date in the first field and leave the second field for the fixed lump sum empty, and then hit submit request. This will give you an estimate for that separation date. After submitting, you'll see a spinning wheel, so just wait for it to finish. Once it's done, a message will appear confirming that your estimate calculation is ready for your viewing. So when your estimate is ready, go to the Documents tab. You will find your estimate listed there with the most recent one at the top, marked with the date that you ran it. All right. So if you are separating with less than 5 years of contributory service, here's what you need to submit to the fund. Number one, your payment instruction form, PENS E6. You can find this form inside your member self-service account under the e-form tab. It is already pre-filled with your name and your unique ID, 9-digit unique ID number. Two, you need to submit to us a recent bank document. This could be a voided check or a bank statement showing the account where you want to receive your withdrawal settlement. And number three, a valid government issued photo ID. The document must include your name, date of birth, and your signature. Normally, a passport is preferred, but if you don't have one, a national ID or driver's license is acceptable. Please know that UNLP is not accepted. Your employing organization will also send us separation documents directly, and those include the separation notification, PF4, from payroll, and the separation personal action form from your HR. You do not need to submit these documents yourself. They will be submitted to the fund directly by your employing organization. For submitting your documents, please follow the instructions from your HR office. Some organizations may ask you to upload documents directly through the member self-service, and others prefer that you hand them to HR so they can send everything together. Again, make sure to follow your organization's process carefully to avoid any delays in processing your benefit. When filling out your payment instruction form, please make sure to date it and sign it by hand with a pen. Remember that the fund does not accept electronic signatures. After completing and signing it, scan the form so you have a digital copy. If your organization allows it, you can upload the scanned form together with the other required documents directly through the document upload feature in your member self-service portal. However, as I mentioned, some organizations prefer that you submit your documents to them first so they can send the complete package to the fund together with their documents. Since each organization has its own process, it's very important that you follow instructions from your HR carefully to avoid any delays. Once the fund receives the full set of the required separation documents, both from you and your employing organization, we'll start reviewing them. We'll start calculating your benefit and processing it. If any documents are missing, we can't begin this process. So typically, it takes about 15 business days from the moment we receive all correctly completed documents before your benefit can be processed. So you can generally expect your payment around 15 business days after the fund has received everything, provided there are no issues or discrepancies during the review. So let's review some key tips to help you complete your payment instruction form correctly. This form is crucial for processing your benefit, so the accuracy is very important. First, be sure to date the form and sign it by hand. Again, electronic signatures are not accepted. Next, depending on your choice, if you want to defer your payment for up to 36 months, complete, date, and sign and submit only page 1 of the form. Make sure to include your most up-to-date contact information so we can contact you in case we need to. If, however, you wish to receive your withdrawal payment as soon as possible, complete, date, and sign and submit page 2 of your payment instruction only. Following the steps carefully will help to ensure that your benefit is processed smoothly and without a delay. If you're opting to receive a withdrawal settlement, it's important that you provide us with the complete and accurate banking details. Don't leave anything blank. Make sure to include the full name of your bank, an account holder's name, your account number or IBAN, the SWIFT code if applicable, the currency in which you wish to receive the payment, etc. If you don't have a bank account, you can request to receive your payment by check through a UN or UNDP office. Just be sure to clearly indicate this on the form. In addition, please provide your full mailing address, a personal email address, a personal phone number. So it will allow us to contact you if we need any clarification during processing your payment. So to recap, submit page 1 of the form if you want to defer your payment. Submit page 2 to the fund to request your withdrawal settlement. Please keep in mind that once you have made your benefit election and your payment has been processed and issued, this decision is final and cannot be changed. So where you can check if the fund has received your documents. You can track this easily inside your member self-service portal under the tab called Proof Documents. This section becomes visible or it has information once we have received at least one of your separation documents, and you'll see it towards the bottom of this page. Here in front of us, the page is empty, meaning no separation documents were received by the fund yet. Once all 3 key documents, the separation notification, the separation of personal action form, and your payment instructions have been received and marked with an accepted date, the countdown for processing your benefit begins. From the accepted date of the latest document, expect an estimated processing time of 15 business days for your benefit to be implemented, provided that there are no discrepancies. All right, before we go into some pension toolkits, I would like to let you know that we should have opened the Q&A session by now. This is your chance to ask any questions or clarify anything that might still be unclear. I will answer your questions right after this segment. Just a quick reminder, as you submit your questions, please avoid sharing anything that is too personal or specific about your case, since we don't have access to your personal records during this global town hall. Also, please keep your questions focused on today's topics, so separating with less than 5 years of contributory service. And I also believe that we will post a link to a survey. We would be very grateful if you can take time to complete the survey and let us know how we did. This will help us plan our future sessions better. All right. So our website, UNJSPF.org. It contains a lot of useful information. The breakdown information for clients, investment information, resource materials, about the fund, contact us, and then urgent assistance, which is basically for those who are in receipt of payment if it ever stopped, or to report the death of a retiree. Depending on your situation, we'll go to a relevant page. So separating or retiring will probably be of interest to you. Here you will find information about separation process, benefit options, benefit estimates, how to submit documents to the fund, separation checklists, etc. The resources page gives you access to materials like booklets and videos. Here you will also find the recording and a copy of presentations from previous briefings. All of our videos are also available under the resources page. They are available in English, French, and Spanish. They're hosted on our YouTube channel, but you can access them also through our website. We also have booklets if you prefer to read about various pension topics. They are available in English or French, and some are available in Spanish. We also regularly send out newsletters with information that might be relevant to participants and retirees. I would say it's worth signing up for our newsletter so that you keep receiving updates from us, or you can check it on our website so you're up to date with pension matters. Member self-service, again, we will have a dedicated session on the practical aspects of a member self-service this Thursday, but a quick overview. You'll need your unique ID number, which is a 9-digit number assigned to you by the pension fund in order to register. If you don't know your unique ID, you can request it by emailing the pension fund. It's also important to know that when you are registering, the email address that you use will be the one where password reset emails will be sent in the future. So if you use your work email and you separate from service, you may lose access to that email. Therefore, we strongly encourage you to use your personal email address to avoid any issues later. The member self-service page can be found on our website under the resources menu. It will includes helpful videos on how to register with instructions and tutorial available in English, French, and Spanish. So once you're logged in, this is what the landing page of member self-service looks like. You can find and print official pension forms, access your pension statement, run estimate of your future benefits, track the fund's receipt of your separation documents under the proof documents, etc. How to contact the fund. If you are an active participant of a UN agency, please reach out to your SPC secretary for assistance with any pension-related matters. For active participants from other UNJSPF member organizations, please contact the fund directly with your questions. You can reach us through one of the official channels that are listed on our Contact Us page. If you wish to get in touch with us in writing, please use the online contact form instead of emailing us directly. This form helps us track and route your query to the appropriate team that will ensure that you will receive a fast response. Once submitted, you'll receive an automated reply with a tracking number and relevant information based on your query. If you prefer to speak to us, you can call our contact center, which is available 24 hours a day, 5 days a week, with toll-free numbers listed on our website. And finally, if you're stationed in New York or Geneva, you can visit us in person. We are open to walk-in clients on Tuesdays and Thursdays. So with that, I conclude today's presentation part. I hope you found it helpful, and I'm ready to answer any questions you may have at this time. So Masata, over to you.
Thank you, Dilba, for this presentation and the information provided. We have a few questions. I will start with, I tried to regroup them into themes, and I will give you the question you can answer. And for the viewers, please note that I will now close the Q&A to allow Dilba to actually address the question that you you had. Thank you very much. So at first, it's we have a series of questions about taxes, and the first question is, which will allow us to actually answer to 4 questions. Are withdrawal settlement tax exempt for citizens resident of countries that don't tax UN income? Does this apply whether I take payment immediately after separation or defer it up to 36 months under Article 32?
Thank you, Masata. So unfortunately, we are not in a position to answer tax-related questions. We make payments to over 180 countries, and each country has different legislation when it comes to taxation of the UNJSPF benefits. Our main advice is for you to contact the UN tax office or an accountant who is familiar with the taxation of the pension benefits, so you can get a proper advice. There is some general information that is available on our website under taxation, but beyond that, there is nothing else we can advise when it comes to taxes.
Thank you, Dilba. The next series of questions is about the document that staff member who separate has to send to the fund and the timing about those documents. And the first question is, if your organization takes a while to get back to you with the documents, is there anything that can be done?
Thank you, Masata. So as I've mentioned, the fund requires a set of documents both from you and from your employing organization. If organization allows you to submit your documents directly to the pension fund, I would say you can do that as soon as possible, a month or even 2 prior to your separation. You can fill out your payment instruction form. If you wish to receive your withdrawal settlement right away, fill out page 2 and submit it to the pension fund together with your picture ID and your bank supporting document. For the documents that are required from your employing organization, those documents will be submitted to us directly by your HR. Please allow them some time. It may take a month or 2 after you separate from service for them to reconcile your data that will allow them to issue those 2 documents. If you go to your member self-service and you see that under the proof docs, both documents are still not received by the pension fund, I would recommend to following up with them directly. You can also contact the fund and ask our assistance so we can try to also follow up with them on our part. But again, without the key documents, the fund unfortunately cannot proceed in processing your documents. Once we receive the required documents, both from you and from your employing organization, provided that there are no discrepancy, it takes us approximately 15 business days to process your benefit and to issue your withdrawal settlement. Thank you.
Thank you, Dilba. There were two other questions on the topic, and I believe you addressed them. I will just mention it in case you want to add something. One of the questions is, how soon can you submit the form? Can a staff member submit the form? And the last question on the topic is, how long does a document take to change from received to accepted status? I believe you answered this, but I will give you a chance maybe to add to it if you want.
Thank you, Masata. So again, you can start submitting your documents 2 months or 1 month prior to your separation through using your member self-service if this is something your organization allows you to do. And please allow the fund up to 5 to 10 business days for us to go over your document and then populate the accepted date field. So because all the documents that are submitted to the fund, they go through the quality review, and that process might take 5 to 10 business days.
Thank you again. Thank you again, Dilba. The next series of questions are related to benefit option and different option that a staff member has on upon separation with less than 5 years. And the first question is, upon separation with less than 5 years, is it also possible to make a transfer agreement with other organization? If yes, how is the process?
Great. Thank you, Masata. That's a great question. Yes, the fund has transfer agreements with several organizations, and these organizations are listed on our webpage. Maybe I can go to our website very quickly to demonstrate where this information is available. Okay, so yeah, let me share my screen. Right, so on our webpage, under participating in the pension fund, there is a page dedicated to transfer agreements. So if I click on it, it will include information on organization with which we do have that agreement. Right, it's a little slow. And each of these, here are the list of the document of the organization. Please make sure that you review the agreement to make sure that you are expressing interest to transfer out your pension rights from the fund to one of these organizations, and that you do it within the allowed timeline. So if you, let's say, for example, if you do join the World Bank, please inform the fund as soon as possible after joining the World Bank that you are interested in transferring your pension holdings from the UNJSPF to the World Bank. By expressing the interest, this is not a final consent. Once you have expressed interest, we will provide you with an estimate of how much you will be transferring from the pension fund. And with that information, you can go to the World Bank and ask them what it would mean for your participation in their plan. After receiving all that information, hopefully you can make an informed decision whether or not you want to transfer your pension holdings from UNJSPF to the World Bank. But the key here is that you express your interest as soon as possible after joining the one of these organizations. Thank you, Masato.
Thank you, Dilba. The next question, my contract ended 2 years ago. In case I decide to withdraw my funds, do I need to remind my former organization to send them, or will they send it automatically?
Thank you, Masata. So if you have separated from service 2 years ago, it's very likely that we have received your separation documents from your employing organization. What is missing right now is probably your payment instruction form and your supporting documents. So if you wish to withdraw your pension holdings from us, please, and you have less than 5 years of contributory service, please submit page 2 of PENS E6 form together with your government issued ID and bank supporting document.
Thank you, Dilba. Next question is about the unique ID number. And the question is pretty straightforward. Where do we find the ID number?
Thank you, Masata. So your unique ID number, you should have you should know it by now. And if you don't, let me go to our website again, and I'll show you how you can request your unique ID number. So on our website, under resources, click on About Member Self-Service. Once you click here, if you ever need assistance with your member self-service account, including information about your unique ID, you can call us, and the numbers are listed here, or you can email us either to this email address or fill out the online form. The third option, I believe, is don't see it here anymore, but yeah, so there are two options for you to do that. You can either call us and request your unique ID, or you can email us to this email address or fill out the online contact form.
Thank you. Next question. This one is about estimate. Does the estimate show the total you will receive upon separation, or does it show total including the contribution from your organizations?
Thank you, Masata. So a withdrawal settlement only includes your own contributions that you made during your participation and interest that you earned on this contribution up to your separation date. The interest is not accrued after you separate from service. A withdrawal settlement will never include organizational share. So again, it only will include what you have contributed to the pension fund during your active participation and the interest that you've earned on these contributions. And the estimate should give you a clear indication of approximately what that amount would be. Again, this is just approximation because, as I mentioned during this session, if, for example, you had a promotion during 2025, that will not be included in your estimate, as the financial data is reported by most organizations to the pension fund on annual basis. So for now, we do not have your financial information for 2025. I hope I addressed that question, Masata.
I believe so. I think you addressed the fact where we can find the contribution for a staff member using the annual statement, as well as reiterating that contribution from the organization are not actually included in the withdrawal settlement paid to a staff member. It is used, as you mentioned at the beginning of the presentation, actually for the financial health of the pension fund, more so than paying a staff member. The next two questions are about the option of, not the option of benefit election, but mostly the option of deferring the choice. So the first question is, can you opt for less than 36 months?
Thank you, Masata. So this option of deferring a payout for up to 36 months is available to anyone. And you can inform the fund by filling out the page 1 of the PENS E6 form and letting us know that you would like to defer the payout of your withdrawal settlement for up to 36 months. However, if during this 36-month deferment period, you decide that actually I need my withdrawal settlement right away, at any point you can submit to the fund page 2 of your payment instruction form together with your government issued ID and bank statement to ask us that we pay your withdrawal settlement to you right away. And again, you give us approximately 15 business days to process your benefit.
Thank you, Dilbar. And the next question start actually with a thank you for your webinar. And still on the same topic, if I choose to defer the benefit or payout, will the organization contribution still be included in the event that I receive the benefit after completing 5 years of contributory service, assuming I rejoin the UN system within the 36-month period and later opt for a withdrawal? I can maybe tell you how I understand this question, unless you have a pretty good grasp of it. I believe the question is mostly about how would, after deferring, how would the staff member benefit will be included in the next participation. That's how I understand it, but I can repeat the question if you would like me to.
Thank you, Masata. So I'll try to address it, and please feel free to add. So if you wish to defer the payout of your withdrawal settlement, assuming that at the time of separation you do not have vested pension rights. So this is one of the options that participants can use if they wish to achieve that goal of having vested pension rights. So you could defer the payout for 36 months, and if you later come back within those 36 months into active participation in the pension fund, provided that we did not pay you your withdrawal settlement, you will just continue adding to your previous participation. And then hopefully you will reach that 5-year contributory service, or even more at the time of separation. And depending on your age at that time of separation, you might be eligible to a periodic benefit from the pension fund. Now, the organizational share, again, so if you continue contributing and you again separate with more than 5 years and elect a withdrawal settlement at that time, the withdrawal settlement never, regardless of how many years of contributory service you have at the time of separation, it never includes organizational share. The organizational share will be useful to finance if you will be entitled to a periodic benefit from the pension fund. It will help finance the periodic benefit, which are payable for life and which also come with survivor's benefit, which are also paid for life. So this organizational share stays in the pool in order to help the fund finance periodic benefit. We will talk about this during tomorrow's session, which will be useful for those who are separating with more than 5 years at the time of their separation. Masata, over to you.
Thank you very much, Dilba. I think you explained it perfectly, because we saw during in this question that the organization contribution always come up for staff member, and as Dilba mentioned, please be aware it's not included in withdrawal settlement, but it's a key, very important, actually, it's essential to actually finance all the entitlements that the fund will have to pay to not only staff member, as Dilba mentioned, but also survivor of staff member, and in even some cases, ex-spouses of staff member. So it's very important for the long-term health of the pension fund. And the last question is more about tomorrow presentation, but I think it's appropriate still. Can you clarify the early retirement age eligibility? Is it always 55, or does taking a withdrawal settlement and later restoring it push the early retirement age to 58? Which is a very interesting question about restoration in a sense.
Thank you, Masata. So your early and your normal retirement ages are determined by when you became a participant of the pension fund. So assuming that most of you here are separating with less than 5 years of contributory service, you probably joined the pension funds participation after 1 January 2014. So for you, if you joined the funds participation as of 1 January 2014, your early retirement age is 58, your normal retirement age is 65. So if you take in the funds participation later, let's say in 2027, your early and normal retirement ages will be dictated but by what the rules will be at that time, which is very hard to know at this point. It may remain, your retirement ages may remain 58 and 65 if there is no change in that. However, if there is a change in retirement ages in 2027, then that's your new entry date to the funds participation will determine what your new early and normal retirement ages are. I hope I addressed it, Masata.
I believe so. That was the last question. I know we still have a few minutes, and I would recommend to viewers, if you have any question, maybe Dilbar can also show it again. You have many means of contacting the fund, and for questions that require personal information, you can use email or use the contact us form, and then in that situation, you can maybe ask a more personalized question with the nominative information about you. Because in this presentation, global one, we obviously don't want you to share your personal information. So thank you again, Dilbar, and over back to you.
Thank you, Masata, and thank you, colleagues, for attending today's session. We hope that you found the information helpful and that you feel better prepared for your upcoming separation. A big special thanks to my colleagues for their support in delivering today's session. And on behalf of the fund, we wish you all the best. Goodbye.